You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for the premier program for volatility traders. Yes, it is time once again for Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Great data, including a lot of great earnings, volatility data for you over there at theoptionsinsider.com. Of course, a lot of great shows over there on the network on demand on just about every platform under the sun. If you want to go above and beyond, get access to some cool stuff, including, of course, Options Oddities coming up later today and our pro Q&A sessions and a whole bunch more. Theoptionsinsider.com/pro is the place to go to begin your journey to the dark side. Of course, however you listen live after the fact, keep hitting us up. Those questions, those comments, those insights, your pearls of wisdom really do help shape these shows, and let us know what you guys are interested in. So keep sending those questions in. We do love to hear from all of you folks out there. Let's see who we're hearing from on the program today. First, let's go back out to the Southern Volatility Capital, known as Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back. How are things in the Southern Volatility Capital, sir?
You know, it's a little chilly here. I mean, we're in the high 50s. I'm not a fan.
You didn't move halfway across the country for the 50s. What the heck is that?
I know. What the heck?
You moved to be next to Undertaker and to be guaranteed 72 plus every day, right?
You would think so.
So they're not living up to the brochure there in Austin. We might have to speak to the higher ups down there, tell them to dial up the weather shield a little bit because they're not delivering on the promise out there right now. Let's also go out now back to the MIAX hot seat, where we are joined once again by Mr. Matt McFarland, the overseer of all things futures over there at MIAX. Mr. Matt, welcome back to the program, sir.
Thanks, Mark. Pleasure to be here. And my 50s sound pretty good from where I'm sitting.
Yeah,
in
that's
Chicago.
true.
It's
true.
pretty chilly.
I think it hit a 30.
I could definitely go for some 50s.
I think it hit the 30s in the morning, did it? How do you like that title, overseer? Should we hand that to your business card, sir? What do you think?
Overseer. Yeah, I do like that. I'll get that printed up.
I like that. The overseer. A lot to oversee these days. A lot popping off in the world of volatility futures. Let's get to it all as we dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a vol trading and trending and analysis and unusual activity. All sorts of perspectives are going to crunch it all here, break it all down here on the Vol Review. And coming into showtime here, we're seeing the markets firmly in the green once again. Pretty much most of the major indices up around 0.5%, or at least NASDAQ's up 0.25%, S&P up, closing in on 0.5%, and the Dow up over 0.5% out there. So firmly in the green, even if not blowing the doors off. But then again, how aggressive can you get in the green right now, right? When we've already had so many green days behind us. Explosions to the upside are kind of hard to come by, at least right now. What that means is, of course, all of our vol products are down, but down modestly from where they were this time last week. You know, we have seen some aggressive vol erosion throughout the week, but it seemed like that vol just kind of crept back in because we are still moving. Obviously, the indices are still moving. Upside movement, people forget about this in the vol space. We talk about this all the time since the primordial ooze days of this show. Movement is movement at the end of the day. Upside, downside, who cares? Everyone freaks out about downside. They think that's vol, but movement to the upside is still movement. So when we're seeing these bounces and movements out there, and we're seeing people, you know, not exactly willing to crush the vol, certainly not much shy of like 15.5 for the most part. Once we get around those levels, 15.5 or a little bit below, it seems like the vol starts to creep back in. We're at that level right now where we can't really break through it. Spikes come into showtime, was a little bit shy of the 17 handle, 1675, puts it down about 0.5 point. So not a huge change from this time last week. VIX cash was at about a 1570, 1575 or so. That puts it down about 0.75 point from where it was this time last week. VVIX was a little bit shy of 105, about 104 3/4, puts it down about 0.75 point. So almost unched across the board. These are kind of rounding error movements out here in the world of vol. Of course, we'll get to all things V-Spike since we're talking VVIX. In fact, maybe let's get out there now. Let's go out to back to the MIAX hot seat. Mr. Matt, what's been catching your eye in the world of volatility? And of course, last week on the show, we had Simon Ho kind of announcing the much anticipated launch of the Viking, as we call it here on this show, which you guys call V-Spikes. What's going on in the world of V-Spikes? What are we seeing out there, sir?
Yeah, Simon is certainly the appropriate person to introduce V-Spikes or Viking. He is the creator and the mastermind behind that. And we're excited about, getting V-Spikes out there and, giving people the opportunity to look at vol in a different way. As you know, the V-Spikes uses an equally weighted methodology when measuring volatility of spikes options, whereas VVIX uses a more traditional methodology, which is skewed to the downside, but volatility risk is more to the upside. So that's why you get a different reading from Viking versus VVIX. And what the VVIX did this week, or the V-Spikes did this week, was trend lower. It started out around 136 on Monday and got as low as 119 yesterday. And that's following the path of Spikes itself. Spikes volatility trended lower throughout the week. Spikes was up at 18.5 on Monday and got to as low as 1573 yesterday. And that's really, on the heels of some bullish news for the market. The Fed was accommodative on Wednesday. The jobs report this morning was pretty bullish. So SPY continues to trend higher, and consequently spikes and V-Spikes trending lower. Where we are right now with spikes, I kind of view this as 15 as a key support level. The market has not been able to sustain any levels below 15 for a while. Spikes is trading at a little bit of a premium to VIX, and that's mainly due to SPY options versus SPX options, where there's a dividend in SPY options, particularly in the December SPY options. So that's why you see a little bit of a premium. But 15 is a key level that I'm watching on the Spikes index.
And listeners, if you want to check V-Spikes for yourself, the ticker symbol is VSPKE. I know it's still kind of propagating out there. It's not on all of our platforms out there, so it's probably not on all of yours yet, but everyone who's asking, where do you find it? Just look for that symbol wherever you look up things like VVEX. It should be propagating out there to all of those platforms sometime in the near future. Let's go back on out now to the Southern Volatility Mecca, where they're chilly. They're putting on their winter coats because it's in the 50s. Mr. Meatball, A, has your blood thinned already? Does it feel like it's in the 20s to you? And then B, what else is lighting up your tape from a vol perspective, sir?
Yeah, well, let's talk about the turnaround the market is making right now. We spent most of the day with the VIX down and spikes down and the market up in the 30s. In the last half hour, the market has given away about 20 points. It's actually, and volatility has increased dramatically. Vol futures are up. Volatility, the whole across the board is up. Viking is up. We call it the Viking here. There's no such thing as V-spikes. VVIX is up. We may be able to keep the Russell and the Dow green on the day, but I'm looking at an SPX that is really softening up, and a NASDAQ that's about to go red. Some of the, we've got strength in energy, we have strength in materials and in mining, in travel. The IYT is having itself a really nice day. Airlines, cruise lines, they're up. But Apple's now red. AMD is red today. The chip makers, other than Intel, are all down today. It's taking us lower, right? You've got, like I said, Apple's red on the day. Meta is up today, which I'm sure people like, but Softy down, Netflix down huge, Peloton getting absolutely destroyed. And so as positive as the Pfizer news is for markets, and the non-farm payrolls this morning, we're starting to really soften up pretty much across the board, except for those areas that I just threw out.
Now, you threw out there small caps. You don't really talk about that a lot on this show. We talk about it a ton on our TWIFO program. If you want to deep dive into all things small caps, check out that show, of course, listeners. But yeah, RVX, the VIX of small caps is exploding 23.5. So everyone who's lamenting, I can't get a 20 handle in VIX. Well, small caps still hanging out in that land. Have you been starting to watch small? I mean, they're kind of hard to ignore this week because the outperformance has been so dramatic. But have small caps gotten back on your radar after this week, Mr. Meatball?
We had Dr. Vix come and speak to one of my groups that I work with, and I've
never heard of that man. He's actually the once and future Dr. Vix. He'll never be truly Dr.
Excuse me. The once and future Dr. Vix came and spoke to a group for me, and he laid out that the only major index that actually does have a Santa Claus rally is the Russell 2000. The rest have been pretty kind of flattish. And so last Thursday, it was funny. He came on, we're talking. He's like, I think you want to go long the Russell 2000. And I was like, when? He's like now. And I got to say, dude was pretty much dead on, because the Russell 2000 since Thursday has just been absolutely off to the races.
And I was going to make that same point. He made that same call a week or two ago on our TWIFO program. He said he was starting to crunch the numbers, and he thought there might be a Santa Claus rally. He thought you wanted to get into it within the next week or two, and he knocked it out of the park on that one, because this past week has been just insane. So yeah, I've been meaning to send my tip of the cap to Mr. Rhodes. I've been leery. I don't want to get his head any bigger than it already is, but he knocked it out of the park with that one. So if you listen to that, listeners, on TWIFO a couple of weeks ago, you got in on that one early on this aggressive move out there in small cap. So well done once in future, Dr. VIX. And before we move off, let's get really quickly, because a lot of people on the network of late have been talking about skew a lot more. It's kind of come back into the conversation, and it's understandable. Skew got very rich for a while there, and then we saw a little bit of retracement. The skew kind of backed off a little bit. Now we're getting frothy again. We're starting to get at or near all-time highs pretty much every day again. So once again, that skew is getting juicy. My favorite / least favorite index out there, which is the skew index, back north of 150, 151.70 or so coming into showtime. Last week was 144 in about 3/4, so up nearly 7 points just in the past week. Mr. Meatball, this is one of my least favorite indicators because it doesn't tell you a lot. But how much more are you paying attention to skew right now that we're back at these somewhat lofty levels?
Yeah, well, I do pay attention to the movement. And when that thing started to rally with the market, I said, well, I kept thinking we're going to get a VIX collapse if they stop bidding up out of the money puts. And like Jem and I and the three of us were talking about a couple of weeks back, every time we get these new highs, they race for protection. And now we might get one of those kind of knee-jerk sell-offs before we just start rallying again. And the VIX is going to stay really, really overpriced. And that seems to be a trend that is happening as we speak. Because you said it right. The skew index is, it flawed, but it does have some useful information when you're kind of tracking out what might the VIX do next. And with it making that big pop, you could tell that they were going to start coming for volatility relatively soon. And they did.
They did indeed. Well, of course, the other measure we like to look at for what's going on in the land of volatility is, of course, the volatility surface, the term structure out there. So let's dive out into the futures. And if we're talking futures, we got the right guy to do that. He is, of course, the newly minted overseer out there. I want to see business cards with that soon. But the overseer of all things Spikes Futures. And Matt, when you're not on the show, you still kind of loom large because you're always sending in nuggets and updates about how much volume you guys are printing and how the market quality is going. So a lot of things are going on behind the scenes over there in the land of Spikes Futures. So catch us up. What's been lighting up your tape? What's going on in the world of Spikes Futures these days, sir?
Spikes Futures continue to go very well. Completed October, fantastic October, where we were averaging nearly 12,000 contracts per day. November's off to a good start as well, averaging about 11,000 contracts per day. Some days we are, about 10% of the VIX futures volume. So for a relatively young contract, that's pretty impressive. We're particularly strong in the longer dated futures. What would be this time of year, the January contract, we're doing quite well. The newest development in Spikes Futures is the introduction of our TAS contracts. So TAS is trade at settlement. And trade at settlement is something that allows you to trade near the settlement price. So, for instance, if you and I, Mark, entered into a trade where I sell Spikes Future at +1 or 1 cent over the settlement price, we could enter in that trade intraday. And then once the settlement price is determined, let's say, for instance, the settlement price of the November future was $17.50. The price that I would receive, I would be short $17.51, and you would be long at $17.51. So that's a way, a lot of funds are benchmarked to the closing price, and that allows them to follow and track their benchmark a lot better. The ETPs are benchmarked to the closing prices of futures. So, and this introduction of TAS is in anticipation of convexity shares coming out with some ETFs that will have Spikes Futures embedded with them. So that is the newest development in the Spikes Futures markets. They're great quotes out there, tight bid-ask spreads with a lot of size. So excited about that.
How did the TAS work out for XIV long term? How did that go? No, I'm just kidding.
Yeah, I'll never forget February 5th, 2018. That was
was
a day that will live in vol infamy.
Yes.
But apparently not in the memories of the regulators, because they approved new ones to come back out.
Yeah, the 1x short is and the 2x long are coming back. I think there were concerns on the regulators' part, and I believe that's addressed in a couple of things. One, the volume that those new funds from volatility shares will trade can not exceed 10% of the volume in the futures market in any 15-minute increment period. So to the extent that they have a major rebalancing going on at the end of the day, they would simply stop that rebalancing and they would be permitted to conduct that rebalancing into the next session. So I think that's why the regulator was more receptive to allowing those the 1x short and the 2x long to come back.
Well, it's interesting. You have to be excited about this as a futures guy yourself. Obviously, we've seen the kind of VIX futures kind of languish ever since those products went away. They really didn't have the catalyst to drive a lot of new volume for them, even in the height of the pandemic when VIX was exploding and the options were doing quite well. We never really saw the futures catch that lift. So they obviously need some other products out there. So the return of these products, even though, again, they're not listed on spikes, but kind of a rising tide lifts all boats at the end of the day. They're going to drive a lot of demand and need to hedge in the futures. That has to be exciting for you. In addition to the ETFs you have coming out on spikes, kind of a bit of a 1-2 punch there, Matt, in terms of ETFs coming back and wagging the dog and driving futures volume, sir.
Yeah, you're absolutely right. The futures volume pre 2018 or really you'll go back to 2017 when the short product and the levered long product were kind of in their heyday, was much higher than it is today. The ETFs that are coming out on spikes, it's a 1x long and a 1.5x long, so that will certainly increase the spikes futures volume. I think it remains to be seen if we will see a short product or a long product with more leverage on spikes, but it should certainly boost volumes in both spikes futures and VIX futures.
Yeah, I'm waiting for the inverse spikes to come next, right? That's coming, and then we're off to the races there, Matt. Well, speaking of the futures out here, let's go on out to the VIX futures. Coming into showtime, we saw a little bit of a decay, not a ton, but some evolution out there in the front portion of the curve. That no future was down a little over a point, about 1.25 points coming into showtime from where it was last week. And the D's future, almost a point, about 0.9 of a point. I'm sure if we racked that up again, that probably would be a little bit more now. Mr. Meatball, what is catching your eye out there? And what was, I should say, really catching your eye out there this week in the land of VIX futures, sir?
Yeah, well, what was funny was leading into the Fed, we saw the relationship between futures and the index really start to normalize. And now, and we saw the curve kind of take shape. And now today, like I said, we're seeing volatility rally and the futures are really catching a bid. And we're at a point where if you get we get a bounce, you could make a little money on the futures. The November is trading about 18.25, so only about 1.5 points above. Even December, which has been, I think really wide, is down to about 3.5, call it, above the index. So we've seen the spreads between the indexes, the spike index and the VIX index relative to the futures tighten up and begin to normalize. So that has been what I've seen. So I'm really interested to see whether if VIX does back off from today, whether spreads widen back out or whether we're heading toward futures to cash spread normalization and some of these insanely wide spreads start to go away. And we're about to go red on the day. It's just unbelievable.
See, that's what happens in this show, sir.
NASDAQ is now red.
We turn markets on this show. You don't like it? Listen to Vol Views. We'll turn a market for you. It's been known to happen. Let's get on out now to the land of the volatility options. Mr. Matt, I know when you're not busy overseeing all things futures, you pay attention to that options volume. It's been a little while since you've joined us. I know you have some trades that went up recently that you wanna check in on, sir. So have at it. What's been lighting up your tape out there in Spike's options since the last time we chatted, sir?
Yeah, there was a decent sized trade in the Spike's options back towards the end of October, which, given the size of the trade and the direction of the trade, I thought it was pretty interesting. It was on October 21st. It was the November 22-27 call spread versus the November 20 put. So as a package, it traded 2,000 times, and for a 185 debit, the customer paid 185. So that was put on October 21st. Futures, Spike's futures back then were 1885, bit lower right now, and that the mid market of that package right now is about 265. So that trade's working out well for that customer, but I wanted to share it because it demonstrates, the ability to get off sizable, complex strategies in the Spike's options market.
Yeah, folks still liking themselves. They're multi-leg spreads out there in Spikes. That's kind of been par for the course since they launched. It's always at least 2, probably 3, sometimes 4 legs we see going up out there a lot in Spikes. Right now, the OI and Spikes options still dominated by that trade you're talking about, the Nove 20 put versus the 22-27 vertical up there, 2,000 times, so 6,000 contracts total across the board. Still kind of dominating the OI out there. We'll see what new stuff rolls onto the tape in the near future as we roll on into VIX options. That seems like the dial's starting to turn up a little bit out there. It was looking decent, but kind of sluggish coming into showtime. We've seen a little bit more volume creeping in now. So we're at about 250,000 contracts. It doesn't sound like a lot, but then the ADV is only 419,000 right now. It's up about 3,000 from this week. So looking from an ADV basis, we may be on course for a more active second half of the session than we were for the first. Let's break down what the size positions are out there in VIX options right now. Cost you 113,000 contracts to break into the top 10 in VIX land. That's kind of about average. It's not heavy. It's not light either. That gets you to the first and only Feb on the board. By the way, 50-50 puts to calls out there yet again, which is kind of interesting out there. Exactly even in the top 10. Read into that what you will, listeners. Number 10, we have the Feb 65s. That may take over for the Nove 60s is my new favorite strike out there. Number 9, $1.15 of the D's 40s. Got a nice little call strip at the beginning here. Number 8, 131,000 of the D's 30s. Then we take a break. We go to the put side. Number 7, 135,000 of the Nove 18 puts. Number 6, back to the calls. 145,000 of my previous favorite, the Nove 60s. Number 5, our fifth and final call. So all calls in the bottom half of the top 10. Also read into that what you will. 162,000 of the Nove 20s, the far more reasonable Nove 20s versus the Nove 60s of the Feb 65s out there. Then we have all puts all the time for the rest of the top 10 listeners. Number 4, $1.71 of the D17 puts. Number 3, 182,000 of the Nove 17 puts. Number 2, 208,000 of the Nove 16 puts. And rounding out the top 10 today, 331,000 of the Nove 15 puts. If we stay on course for what we've been doing of late, those Nove 15 put traders may be frustrated. It's going to be hard, it seems like, for us to really break through that 15 handle with any real, aggressive move. It seems like whenever we get close to it, the vol starts creeping back in, like we saw today, like we saw several times this week. Let's go on out now to what's trading today and what was lighting it up throughout the week. Today, like we said, kind of so far a decent day, but not blowing the doors off yet. Close to 250,000 contracts on the tape right now. The most active contract today, the Nove 17 puts, 22,000 of those, followed by number 2, 18,000 of the Nove 16 puts. Number 3, 17,000 of the Nove 18 puts. Number 4, almost 16,000 of the Nove 15 puts. And rounding out the top 5 today, 14,001 of the NOV 13 puts. My goodness. 13 puts. Can we get there? Of course, anything's possible, listeners, but if past is prologue, at least right now, seems like that may be a bit of a bridge too far. But we shall see. Thursday, we had a little bit more paper on the tape. 470,000 contracts, the most active contract, 30K almost exactly of the D16 puts, followed by 30,000 almost as well of the Jan 16 puts. So maybe a bit of a put spread / roll. It'd be weird if they were rolling their Ds already, but we've seen stranger things. Number 3, 22,000 of the Feb 25s. I like those better than the 65s, that's for sure. Number 4, 21,000 of the NOV 15 puts. And rounding out the top 5 on Thursday, 20,000 of the NOV 17 puts. Wednesday, kind of a lighter day, only 309,000 contracts on the tape. You can probably say that for most of the week. Wasn't a rock'em sock'em week. 21,000 of the NOV 17 puts. Number 2, 20,500 of the NOV 16 puts. Number 3, 18,000 of the NOV 15 puts. Number 4, 18,000 as well of the NOV 18 puts. And rounding out the top 5 on Wednesday, sneaking in there right under the wire there, the D's 37 halves, 15,008 of those bad boys. Tuesday, again, decent but kind of light paper overall, 360,000 contracts on the tape. Even though we did see a decent print, the most active contract on the day, 63,000 of the NOV 17 puts. So a good chunk of that paper coming in that one NOV 17 put. Number 2, a distant number 2, 23,000 of the NOV 18 puts. Number 3, the Jan 95s, back to that strike, 16,000 of those bad boys on the tape. Number 4, 16,000 as well, the NOV 15 puts. And rounding out the top 5 on Tuesday, 15,000 of the D 37 halves. Out to Monday, again, decent but not a blow the doors off day. 342,000 contracts on the tape. The most active contract on Monday, get this, listeners, the D 70s. 27,600 of those going up on Monday. Every once in a while, these strikes slip in there that are just fascinating and head-scratching at the same time. Number 2, 23,000 of the NOV 17 puts. Number 3, 21, almost 22,000 of the NOV 16 puts. Number 4, 18,000 of the NOV 18 puts. And rounding out the top 5 on Monday, 16K of the NOV 20 calls. Mr. Meatball, A, what caught your eye out here this week? And B, how many of the Jan 95s and D 70s did you partake in this week, sir?
Yeah, it's interesting. They're not really going for a lot of the kind of near the money calls. They're doing a lot of aspirational things. We continue to see really strong trading in the November puts. They were the amount of trading back and forth on those 15 puts has been astounding. They did trade as high as 30 cents. I believe, in the morning yesterday before, we've seen volatility really increase. So just really interesting options trading floating around. We are seeing, like, as you said, an uptick in trading volume today, a little bit of an uptick in overall trading volume. Although today, the biggest trade of the day, NOV 13 puts for 3 cents. Really? You think that's going to happen? I do not.
That's what I was just saying. I saw a lot of those printing. That seems like a bit of a bridge too far for me, even for 3 cents.
But why buy those? The 15 puts for a dime, to me, they're not completely without a possibility of coming into play. I think there's some real opportunities there. I'm concentrating most of my trading. The easy money, I think, has mostly been made in November. So I'm looking at December as a place to find some opportunities, at least until we see now that we're getting a nice little vol pop here today, I might be able to play in November again. But most of the opportunity today has been in I think builds in December, not as much in November.
Of course, now that we've pushawed the NOV 13 puts, of course, we're hitting the 12 next week, sir. You know that.
Yes, of course.
We have spoken it into fruition there. Let's head on out now. You know what would look really good if you had a 12 handle in VIX? It would be VXX. Coming into showtime, we were at, looks like about a little bit north of 20.5, about 20 into 60. That puts it down about 0.8. It's not quite a full point from where it was this time last week. Some decent paper on the tape out there today, though. 169,000 contracts lighting it up out there. We'll get to all that in a second. First, let's break down what the most active, the most sizable positions are out there. All right, number 10 out here. Cost you 15,000 contracts to break into the top 10 over here. That gets you to our old friend VXX1. There's still 2 pre-split adjusted contracts, which if these products continue apace, we may have to adjust again. And then we have VXX1 and then whatever they're going to call this one and then something else. We have multiple split adjusted contracts lurking in the top 10. How insane will that be? But we're not there yet, listeners. 15,000 of the Jan 2023 3 puts. Again, VXX1. Number 9, 15,700 of the NOV 25s. Number 8, 16,700 of the D's 30s. Number 7, Jan 21 puts, 17,000 of those. Number 6, 17,500 of the NOV 19 halves. Number 5, 18K of the other VXX1, the Jan 2022 12 puts. Number 4, 18,700 of the NOV 21s. The rest of it is all no, looks like. Number 3, 20K of the NOV 20 puts. Number 2, 20,500 of the NOV 21 puts. And rounding out the top 10 out there today, listeners, 25,500 of the NOV 18 puts. Those still have a ways to go, but hey, we'll see. If we get to that 12 handle, look out below here for VXX. In terms of what's lighting it up out there today, listeners, let's get on out there. The most active contract today in VXX are the NOV. Pretty much most of it is expiring today, so expiring on the 5th in the weeklies. About almost 9,000 of the NOV 20 puts. Again, those are kind of a crapshoot right now. We'll see how those turn out. Number 2, 7,500 of the NOV 20 halves. Number 3, 6,000 of the NOV 20 calls. Number 4, we have the NOV expiring on the 19th, so your regular monthly NOVs, 5,500 of those 25s. And rounding out the top 5 today, 5,500 as well of the regular monthly NOV 19 calls. Mr. Meatball, sir, anything lighting up your tape out there in VXX this week, sir?
Yeah, it's moving around a bunch. It was pretty much down all week. Now it's pretty much eaten up most of what you gave away for the week, which is why you trade this thing. You don't just buy it or sell it. You just trade around it. Looking forward to the spikes version of this. This will be fun. I'm going to trade the bananas out of that thing. And yeah, the implied volatility got low. It's way up. And yeah, all the stuff expiring today, super active. And the regular November is trading some, but a lot of the short dated stuff is where all the concentrated option volume is.
That is indeed the case. Let's get on out there to another product that likes to get a little bit of downside behind it. That is, of course, UVXY. This one kind of racing VIX to see which can break the 15 handle first. This one seems like it has a better opportunity to do so. 15 3/4 or so coming into or I should say coming into right now, actually. That puts it down about 3/4 of a point from where it was this time last show. The ADV 168, that's ticked down about 3,000, not a huge change out there. And today we're pretty much at that already, 157,000 contracts on the tape. So a pretty active day out there for UVXY. Let's just do a top 5 out here so we can get to some of you folks and everything else here on the old Vol Views program. Number 5, 12,600 of the NOV 15 puts. By the way, it's 70-30 calls to puts in UVXY, which is interesting. And VXX, if you were intrigued, listeners, it was 70-30 puts to calls out there. So VXX and UVXY, kind of a bit of an inverse of each other, which is interesting. Number 4, 13,000 of the March 60s. Interesting. Number 3, 14,000 of the NOV expiring today, 15 calls. Number 2, 14,800 of the NOV also expiring today, 14 puts. Those seem like a bit of a bridge too far. Got a long way to go to the 14 handle for today. Number 1, 17,000 of the Jan 75s. We talked about these before. The weird upside that goes on up there in UVXY, but there is some interest and some life to it, so hard to fault them. Today, we get the most active contract, which makes sense given where we're trading right now, are the NOV 15s. These are going out today. Almost 21,000 on the tape already, followed by number 2, NOV 15 puts also expiring today, 19,000 of those. Number 3, the NOV expiring next week, so the 12th, 16 calls, 11,500 of those. Number 4, 9,000 of the NOV 16s, also going the way of the dodo today. And number 5 out there, 7,600 of the NOV 15s expiring next week. Mr. Meatball, it's kind of been an interesting week for UVXY. It comes in, it goes back up, comes in, it goes back up. Net off about 3/4 of a point on the week. What's been catching your eye out there as well, sir?
Yeah, UVXY has been on a downward path. It set some new all-time lows this week. It's been below 15 multiple times and seems to have, along with the VIX, every time it's gotten there, vol seems to have found a buyer, and UVXY started to go up, and we're seeing that today. UVXY looks bullish, and there's some, a little bit of paper in there today too. Let's see, 1 second. Yeah, you've got, to show you where things were, 18,000 of the no 15s have traded today, and 21,000 of the 15 calls have traded. So really active day in options expiring in 2 hours and 15 minutes in UVXY.
So what you're saying, I think, if I could read between the lines of what you're putting down here, Mr. Meatball, is that we should all run, not walk, to our broker and load up on these Jan 75s and UVXYs. That's what you're saying.
How can you lose? How can you lose?
Jan 75s or no 13s. I don't like either of them that much, but that's a conversation for another day. Let's keep on rolling out here. Of course, I'm joking, listeners. Let's keep on rolling out to the land of single name vol, because a lot of the action going on out there can be found out there these days. If you want to crunch these numbers for yourselves, if you want to analyze a ticker, see what it's done in the past, what it may be up to in the future, you know where to go, theoptionsinsider.com. How much do we like you folks? We give you all this data for free, coming at you courtesy of our friends over there in Orat's land. Until we started doing this, until we twisted Matt's arm to crunch these numbers for us, there really was no source of this data. There was like one Goldman study from like 10 or 15 years ago, and that was it. And that seemed ludicrous to me, that no one was out there crunching the numbers on something as commonplace and as frequently asked about as earning straddles. It's a no-brainer. So now we do it for you, and you guys get it for free. You can't. This is the kind of stuff that if a house did it, they kept it to themselves, so their proprietary customers, and they would send out some vainglorious research note about how great their proprietary research was on their straddles. Nope, we're giving it to you all. You don't need to go to Goldman. You don't need to go to Morgan. You go to us for free, theoptionsinsider.com. Click on the options news and articles tab. You'll see what we got there. A heavy week again this week, listeners. Clorox and CNA on Monday. Tuesday, Pfizer. Some big news coming out of them of late. BP, Under Armour, Activision Blizzard, and Lyft. Bad news has been coming out of Activision Blizzard for a while as well. CVS on Wednesday, Norwegian Cruise Line, Cedar Fair, Roku, Qualcomm, Etsy, and EA. Thursday, we had Moderna, back to the vaccine front, Viacom, Pinterest, Uber, Airbnb, Peloton, and WWE. They reported numbers yesterday and then also fired a bunch of people. So interesting timing for WWE. Today, it's not done. We got DraftKings and Coinbase. And man, these things are popping off hot and heavy. Let's break down a couple really quickly. Moderna yesterday, they were at 346 going into their announcement. They were pricing in 7%. They delivered 17%, listeners. Again, all these numbers I'm going to quote you right now are just in the immediate aftermath of the report. Of course, they could change intraday. They could move more from today, obviously. But Moderna selling off again today. My goodness, down another 21% today. So, wow, this thing, in terms of how much juice they took out of this, that 7% they were pricing in as a straddle was dramatically overdone, because the stock was almost 350 when we went to this report. They're trading 221 right now. My goodness, listeners, they blew the doors off their straddle out there. So, the vaccine premium comes and the vaccine premium goes. And when it goes pretty hard. Qualcomm was on the third after the bell. 138.5 is where they were trading. Of course, Qualcomm kind of at the heart of all this chip madness going on out there right now. They were pricing in 4.6%. They delivered 12%. And they're up another 5% again today. So, yeah, they were at 138.5. They're at 164 right now. It's another one blowing the doors off out there. Let's see what else we got. Pizza, which you may think is Domino's, but it's actually, I almost said Jimmy John's, a sandwich chain. It's Papa John's there. 123.25. How much Pizza Vol was there? 5.5%. How much did they deliver? 7.5%. So even Pizza Vol outperforming, listeners. Let's see. But it's not all outperformance all the time. Some of them fell into the old predictable standby patterns of underperforming. Let's go to gaming. Electronic Arts. November 3rd, they were after the bell. They were at 139.5. They're pricing in 5.2%. They delivered 4.3%. Actually, right now, they're back to about 139.5. So they are having moved net naught on their earnings week. So, wow, that's kind of what we've come to expect in the modern earnings season, right, listeners? Is a whole lot of nothing. And EA delivering that Roku. Let's see, they were at $313.60. They were pricing in 8%. They delivered 5.6%, so they underperformed. Let's see if we extend that frame of reference a little bit farther here. Let's see. They're off another almost 5% again today, so they're down to 275. So if you extend that to today, they've actually blown the doors off their straddle, but in the immediate blush, they underperformed. So a lot of names here. We can keep going on these for days. I encourage you to check it out for yourselves, theoptionsinsider.com. Listeners, you see all these earnings move results, and indeed the newly updated earnings season report, which, by the way, listeners, listen to this. How long have we been talking about just earnings vol annihilation, right? Guess where the season is hanging out right now? We've seen seasons 55%, 61%, just anemic. 95% right now. So if you bought a basket of all the straddles, you got back 95 cents on the dollar. That's pretty damn good, especially for a pandemic era. That's the best we've ever seen. Now, granted, that's not the whole season. We're not done yet. And week 2 was still pretty apocalyptic, 56%. But we're getting there. Week 4 so far, 128%. So dramatic outperformance. I don't know if we've ever seen that I don't think we have in the pandemic era. So perhaps the worm is turning. I said that cautiously, but optimistically. We shall see. There's big names popping off come up this week. We had, of course, that Peloton. They were pricing in, let's see, $9.50. I don't think that was enough. Spoiler alert, because they're off $30 right now, or 34%. My goodness. Go figure. When they were the only gym in the country, it kind of looked pretty good for them. These days, maybe not as much. So yeah, Peloton getting annihilated out there. So interesting stuff. A lot more of those. We have Uber, let's look at WW really quickly, just because we talk about them on the Odd Block all the time. They were yesterday after the bell. They were at 61.70 when they announced. They were pricing in 470. They're pricing in 434. In the past, they moved 473, and right now they're off about 3%, trading about $58.50. So not a huge move for them. Bit of a sell-off, but nothing crazy out there. We got DraftKings coming up. Actually, they were today. Let's look really quickly at DraftKings as well. 46.84 is where they were trading going into their announcement. They're pricing in about $3. In the past, they've moved 317. It's not a huge evolution there. They're off $2 right now, or 4.5%. So it's like the bit of underperformance for DraftKings out there. If you want all of this, there's a ton more we haven't even gotten to, listeners. You know where to go, theoptionsinsider.com. Meanwhile, we got to go into some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, where we ask you guys questions. You guys turn the spotlight back on us, going to ask us questions as well. I was going to get out to our question of the week. You guys play along if you haven't. It expires quickly. We have what's the most terrifying strategy out there, but we're kind of coming up against. I want to make sure you guys get on, including you folks in the live chat. Always get bumped to the top of the list. Our buddy, old Mr. Luigi. Good to see you back in there, Mr. Luigi. He wants to know, hey, Mark Squared. That's a new one. Hey, Mark Squared. Have you guys seen the vol on Sava? Ticker symbol SAVA. This is Cassava Sciences, listeners. It's up 4.5% or about 5.3% right now. It's like this is the name that a year ago was trading $10. Had a huge move in January this year. Went from $10.50 up to, looks like 88. So this was obviously an early meme candidate. Gave a lot of that back. Was trading $34 by April. Then rallied again in July up to their 52-week high of 146. And they sold off again to 41 in September. So this thing's kind of been all over the place. Obviously a biotech out here. Let's see here. Mr. Meatball, this is not one I watch regularly. I'm going to try to pull up some vol data on it. Is this one that's come across your Gamdar, sir?
You know what? It has. And you're right. It is definitely memey. been very popular. I'm not even sure what what their science project is, but I'm told that this is very much speculative and a little bit of a stay away.
Oh, these were the Alzheimer ones. And I guess they had, there was some, I think people thought their data was questionable. And now I guess the journals are saying that it's not questionable. So the data was good. So these biotech listeners are always going to move around. This chart is indicative. I'm looking at the data right now, Luigi. 30-day vol, 155. And given this chart, you can maybe argue that's kind of light, given what's going on out there. Let's see, with terms of, there's skew is all over the place. You got the 61st percentile right now for skew. So skew actually isn't that crazy out there right now compared to where it has been in the past. Let's see, what is the ADV out here in a name like this? 39,000 contracts. That's actually nothing to sneeze at. Doing 74,000 today. This is an interesting one. We'll have to keep an eye on it. It hasn't come up on our scans recently, but maybe that'll change today. Maybe for oddities, this one will come out today. I'm guessing you're slinging this one, Mr. Luigi. Tell us what you're up to out there. We always like to know what folks are up to. Well, let's go on to this one now. This is a good question here from Alexis. Matt, this is actually right up your alley. We were just talking about this at the top of the show. Alexis wants to know, what should be my use case for vol measures like VVIX and V-Spike? I understand, by the way, you got the ticker symbol wrong there. I'm just correcting you for V-Spikes. I understand the products theoretically, but I'm not sure how I should be applying them to my trading practically. Mr. Matt, this is one of the things you guys have been working on for a while, the Viking, aka the V-Spikes. For folks out there who kind of want to know maybe what they should do with this, what should you tell them, sir?
Yeah, I think it's an interesting tool to keep an eye on. I think the way I would suggest using V-Spikes would be to compare the trend and movement of V-Spikes to spikes itself. So you would expect them under normal situations that when, spikes is trending lower or trending higher, that V-Spikes would be moving in the same direction. I think what should be interesting to folks is when there's a divergence between those things. So if spikes is trending lower, but V-Spikes is going higher, then the market's probably communicating something to you. Something is off, something is different, and there may be opportunity there. It may be a reason to risk off a little bit. So that's a way I would suggest that folks look at these instruments.
Mr. Meatball, we talked about this before, obviously mostly with VVIX. Now that we have V-Spike, we have a new indicator to throw into the mix. But, certain strategies from an options perspective tend to be more favorable in a high vol environments than in low vol environments. So explain to, who was this? Alexis, what do you use things like VVIX and now V-Spikes for, sir?
Yeah, they actually, I think, have a lot of use case. I pay attention when VVIX is going up and VIX is down, or kind of the general direction of VVIX, because when VVIX is rallying, it's very difficult for volatility to fall off. And that is what I think something that always needs to be paid close attention to. So I use it as one of my indicators in my traffic light for volatility. When that thing is rising, it's very difficult to think that volatility wants to stay down, because it's almost always both of them are going to be pushed around primarily by call action.
All right. Great question, Alexis. We should spend more time on it, but we got to keep on rolling into the most difficult, indeed the most dangerous portion of the show. Get your crystal balls ready in the live chat, listeners, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the crystal ball. I think the technical term for this is holy crap, because we've seen pretty much over the course of the show, as we've been gabbing, that vol modest sell-off I talked about at the top of the show. Yeah, that's gone. We got VIX now. Like I said, Mark was saying earlier, NASDAQ turned negative. We have VIX pretty much getting back all that it gave up last week and then some. It was at about a 15 16.75 when we kicked off the show. It's about a 16.85, closing in on 17 right now, listeners. So it's actually now up on the week from where it was last week. Spikes, same deal. We were at a 16.75 kicking off the show. It's at a 17.5 now. So that's actually up a quarter of a point from this time last week. So vol coming back in. We've said this for a while, and throughout the show today, it seems like it gets hard when you get down to those mid to low 15 range to stay there for too long. And that's pretty much what we're seeing right now. So intriguing stuff. Is the worm, has it turned? Are we going to see a sell-off net on the day for most of the major indices? NASDAQ back in the green again, but we shall see how long that lasts. The vol product showing us that we got some rocky waters ahead of us. So let's see where we were, if I could get there. There we go. A lot of scrolling to do on the show today, listeners. All right, there we go. So yeah, last week it was myself, Mr. Simon, and we had the Meatball. And let's see, Mr. Meatball's at a 19.19, so not quite there, but hey, we wait a little while. Maybe we'll get there. Let's see, I was at a 15.76, so was looking good until it wasn't, obviously, listeners. Simon was at a 15.5, so I was almost literally a bullseye until I wasn't. So again, that's the capricious nature of what we have going on out there. Let's see. So yeah, 19.19. No winners here for our hosts, unfortunately. Out to the listeners. Wow, we got a whole gamut. 14 quarter, 15 quarters, a lot of quarters. 17 quarter for Alan. That looks a little better, Alan. You might be winner, chicken dinner. 17 quarter. Todd, 17.20. Oh, both of you. Nice on spikes. You're within the 10th of a point or close to it. Let's see. We've got Super VIX. I like that handle. All at 17. He's looking pretty good as well. Athena 14.70, and JJ was at an 18. Frank was at a 17. Oh, was looking good for Frank as well. Nichols, unfortunately, 15 quarter. Options Queen 16. Luigi, were you at 16.85 this week? Is that correct? Because that's exactly where we are right now, actually. Oh my goodness! If that's the case, winner, chicken dinner for you. Or that might be old. Maybe I saw it from 2 weeks ago. So if that's from 2 weeks ago, you're still looking pretty good out there. Well done, my boy Luigi. I have to have my producers update me if that's actually the prognostication for this week. If that's the case, sir, you may have a prize coming your way. We shall see. All right, let's go on out now. Let's go across the horn. No winners this week, Mr. Matt. So that means you get the dubious honor of going first, Mr. Matt. What are you feeling for this time next week, sir?
Of course, my call is on spikes, so which is trading at a little bit of a premium.
We like all the prognostications here, sir.
Over the course of this hour, I'm a little bit less confident because spikes has been trending higher, but I'm going to call lower. I'm going to call for 15.75.
15.75 says Matt. All right, 15.75 for you, and then Mr. Meatball, you and I were both kind of away, so I'll let you have the pride of place to go next if you want. What are you feeling this time next week?
Let's say, all right. Well, right. The nice thing is I don't have much of a book right now, Mark, so I can kind of guess whatever I feel like. Today's probably, I think early in the week we could be a little softer, and then they'll crush vol. I'm going to say 15.15.
15.15 for Mr. Meatball. All right. And yeah, we're kind of all over. We saw a whole week's worth of evolution just in the span of an hour. That shows how difficult this game is, listeners. So now we're at 17.35 or so in spikes. Getting north, again, that was impressive, Mr. Luigi. If that was 16.85, yeah, I got to give you something for that. So hit up our producers. We'll see what we got. You didn't win the prize box this month, but that went to Mr. Nichols. But, you're going to come correct with a prognostication like that. We got to send something your way. All right, let's see. Yeah, you listeners, play along. Fabulous prizes to be had here. If you guess correctly like Luigi did. That was very impressive this week. All right, let's see. At about a 17 now in VIX, a little bit north of that, 17.35. Is this true vol, or is this kind of just a little bit of a reaction to what we're seeing out there today? That's always the question here. And also, will it persist till this time next week? The answer to all of those is the big question mark for this segment. I'm going to say less vol. I could see an argument for a 15 handle again, but we tend to bounce off that pretty aggressively. Witness today. So I'm going to say north of that, but not a ton. I'm going to say 16. Let's go 35 to give Matt a little bit more room to the downside. So there's our spread for this week, listeners. The meatball on the dark side, 15-15. Matt at 15.75, and me on the correct side at 16.35. All right, listeners, we've been gassing on. We got to get on out of here. Got to get ready for the oddities coming up in a little less than an hour now. But before we do that, let's go around the horn. Mr. Meatball, we'll start with you, sir. If folks are intrigued, they want to kick the tires on the Gamdar for themselves. Maybe talk about, what was that name, that cassava that looks like Luigi has ratio puts on for, as well as out of the money call and long stock. So he's all over cassava. If people want to talk about those names or others, where should they go? What should they do, sir?
Go to optionpit.com. We're putting out great content every day on volatility, on trading, stuff written by my entire team. You're going to want to make sure you check that out.
Check it out, optionpit.com. And Mr. Matt, if folks want to learn more about V-Spikes, a.k.a. the Viking, or anything else you guys have cooking over there at MIAX, where should they go? What should they do?
Go to MIAXoptions.com, and specifically about V-Spikes or the Viking, go to under products, options information. You will find information about V-Spikes. So check it out.
All right, check it out. We got to get it on the main Spikes page now, Matt. That's the next step. So they can go to MIAXoptions.com/Spikes. Get it all there in one place. But in the meantime, listeners, you can go there and drill down to that page he just mentioned here to get more access to that and a whole bunch more over there, including a link to a cool show called Volatility Views. What more could you ask for from a vol-oriented destination? That's going to do it for us here on our regular broadcast week. Everybody in the secret club, go get a beverage, maybe do some trading. We'll see you back in about 50 odd minutes now for Options Oddities. Then, of course, back next week for another episode of Volatility Views. We'll see you then.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MIAXoptions.com/Spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.